So guys, good morning, good afternoon, wherever you are. So guys, good morning, good afternoon, wherever you are. So today, I'm really very sorry for this one. So please drop in the comment section. Drop in the comment section wherever you are. Drop in the comment section wherever you are, where you are chatting from. Let me know your location and your timing. Right? Let me know your location and your timing and exactly where you are now, what's the time and your location. So I'm really very sorry. Last week we should have held a class last week Friday by 17 p.m. GMT plus 0 GMT 1, but due to technical issue, we've really not been able to hold the class. I really apologize and I tender my reserve apology on it. Right, so it was based on technical issue that was beyond my control. That was beyond my control. That was why we could not hold the class. Right, that was why we could not hold the class. So, but as it is now, guys, we are back now. So, while you are watching the video, please do well to let me know you guys review on the what on the comment section, the audio, the video, and the the video, and even the what the voice, the video and the audio. It's quite very okay and fine. Let me know so that we can just once we are done with the review, we can actually work this start and we roll out the schedule when we'll be doing the live class. Structure of how the live class is going to go about. So basically, we are going to be doing price action, just like I have said. We are going to be doing price action, and while we are doing the price action class now, it's going to be of two parts. We have the part that we have to do with indicator-less price action, whether you analyze the market based on just the candle and the candlestick pattern alone, based on what you see on the class. You don't need any indicator, and we'll consider the other side of people that actually what they are more comfortable with indicator. So we are going to consider those people too. We are going to consider them. So those people who are actually going to be what to be trading with, they're actually going to be trading with indicator. We'll consider them too, and then we'll give them their consideration about that too. So this is the outline of how the class is going to be. So basically, we are going to be talking about the market structure. We'll talk about the candlestick patterns, support and resistance. We'll talk about the forex timing, the weekly market forecast, and so once we are done with those market structure, candlestick patterns, support and resistance, and forex timing, we are going to advance into giving our weekly forecast. So that is going to be mainly on Sunday. And another thing is that now this live class is not just going to be on synthetic indices. Since we are talking about price action class, so you can apply the same price action class, the same price action knowledge that you have on synthetic indices, you can indeed apply it to currency pair. So we're actually going to be looking at currency pair. We're going to be looking at currency pair. So it's not as if we are just going to limit ourselves to synthetic indices too, right? We are going to apply the same market structure knowledge to what we are going to apply the same market structure knowledge that we have. We are going to apply it to what to we are applying it to the we are going to be applying it to what to our currency pair, and if time permit us we tap into currency cryptocurrency too. But when we are going to the cryptocurrency now, we are not just going to be limiting ourselves mainly on we won't do much. All we will be doing there is just the technical analysis part of it. All we are going to be doing there is just the technical analysis part of it.
Good afternoon. I send you here na WhatsApp you printing. Why?
My problem.
Eh?
My problem with my printer.
You have an issue with your print?
So we actually going to be doing it that way. So on the cryptocurrency side now, we are just going to be taking the stable coins. we're going to be taking the stable coins and we're going to analyze and look at how the structure forms on those things and indeed how we can indeed take advantage of that and leverage on it. So that's what we are going to be doing. So just like I've said, so by the time we roll out those, we by the time we roll out those that are through with our market structure, the candlestick pattern. On the candlestick pattern, we are going to be talking about the physiology of the psychological physiology behind every candlestick pattern, right? The psychology behind every candlestick pattern. So on that, we are actually going to be talking about that. So we'll talk about the engulfing candle, the shooting star, the hammer, the doji, the morning star, the evening star. We are going to be diving well into those things. Right? We are going to be diving well into those things and we give a concise breakdown of them, give them the pros and cons of those candlesticks. When you have those candlesticks forming at what at a higher time frame, support and the lower time frame resistance, what do you look at for? So we're actually going to be looking at those things, not just looking at not just the candlestick pattern alone. We are going to be talking about the pros and cons of those things and we are going to be doing the justice there. We are going to be doing the justice on that too. So that being said, so on the support and resistance now, basically we have two types of support and resistance. We have the dynamic support and resistance and the static support and resistance. So for the dynamic support and resistance now, the dynamic support and resistance are actually those that change, right? Those that change with price. Those one are what? So we won't talk about the dynamic support and resistance. That's when we talk about our what? Our moving averages, right? Then that's when we talk about our what? Our Bollinger Band, the upper band in Bollinger Band and the lower band in the Bollinger Band. So those are what dynamic support and resistance that change with price. While the static one are the normal one that we know. The static one are the normal one that we know. Right? So the static one are actually the normal one that we know. Right. So an example of the static one is actually you drawing just an horizontal line or your trend line now. Now you can see you can call this a what? A static support and resistance. Now this is what at here it was acting exactly as what as a support, but it did act as a what as a resistance here. So that's when we tend to have a change in row, which you call a flip zone, right? We call it a flip zone. So we are going to be looking at those things. And I say so basically your static support and resistance are the horizontal line that we draw or our what or our trend line. Like those are what they are. Those are the static support and resistance that we have. And the reason why we call them static is that they don't change. Right? This is an example of this is a what? This is the static support and what? This is the static support and resistance. So that's the reason why we call them what? A support, a static. They are constant. They don't move. Price would rather take themselves, move and go and meet them. Why the dynamic they move with what? They move with price. So those are what we are going to be doing justice to. Those are what we are going to be doing justice to. So that being said, we are done with the support and resistance. And now we have to talk about the forex timing. I will talk about the forex timing. A lot of people actually be objecting that okay, the forex timing that we have does not work or what on synthetic indices. By the time we get to the forex timing, you're actually going to know whether it works and it doesn't work, right? So once we are able to analyze those things and we do justice to them, we'll understand the pros and cons of them. Then we'll now move into what weekly market focus. So on this weekly market focus, so what we are going to be doing here is that we are actually going to be so what we are going to be doing here is that we are actually going to be testing out those things live. We apply them. After every knowledge, application matters a lot. So we are going to be applying them and shows how we tend to combine those things and how we use them to frame our setup. So for the daily market structure now, on the daily market structure now, this is where we're actually going to be looking at. So this one is going to the weekly market structure is going to be on Sunday. So we tell you the weekly that means we are giving you the overall direction of whatever pairs we're actually working with for that week, what we should look at for that week. But for the daily market focus now, the daily market focus that means that is going to be intraday trading.